Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, June 15th. Great to have you here with us for another episode. I am your host, Jesse Allen. Thanks for joining us today. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com. It's where you can find all of our streaming sources, social media links. Please subscribe, leave us a review on Apple Music, Spotify, iHeartRadio, wherever you stream the show. Our YouTube channel, subscribe there as well, and join the Market Talk family. And all the great information we have out there for you to try and help you with your marketing and your operation and keeping you up to date on what's going on in agriculture. And we got plenty to talk about once again today, and we are doing that with our good friend Brian Splitt with agmarket.net joining us here today. Brian, great to have you back on the show, and we were chatting a little bit before we jumped on live here. It's an interesting time with this weather market, just making it fun. You kind of said, every 6 hours or so when the weather models come out. It's a very volatile time right now, looking at all these weather models shaping up and how they're impacting the grain markets.
It is, and the market does not wait. It seems like it's all in on every forecast, and so you come out of the weekend, and we came out of the weekend after Memorial Day very strong. We came out of the weekend after Memorial Day very strong. Then this past weekend, the weather flip-flopped, and we had that cooler, wetter bias in the 8 to 14 day. The market did not waste any time taking that premium back out of the market. And so when you look at where December corn made some lows today, we effectively took back half of the rally from the $5.25 low that we had made in late May all the way up to the $6.2825 high that was just made on that WASDE report. So half of that just, in a few sessions. And so I think everybody that's watching what's going on and watching these weather models is very well aware that we've got some very interesting statistical data here comparing how dry we are to 2012 in the last 14 days, 30 days, 60 days, 90 days. And so a lot of this short-term bearishness is hinging on this rain event that's supposed to come in early next week. And if that doesn't come to fruition, then this market's going to go right back up again. And if it does come to fruition, and if we end up making new lows for the month, which the low was made June 1st, which was the session coming out of Memorial Day weekend, that was at 551. I would venture to say that if we find ourselves below 550, we'll probably go right back down and recheck those $5 lows. If the rain is a bust and does not come to fruition, I don't see why we wouldn't go right back up to that 610 area where this market dropped from and settled last Friday.
One thing I thought was positive today, especially on that corn market, is that we did bounce off the lows of the session today at the close. And I would have to think that maybe just, maybe taking a little bit of the bearishness out, or at least maybe just kind of relaxing the brakes, pumping the brakes a little bit on this. I thought that was a positive today at the close to get us a little bit off the session lows.
Anytime you close off session lows and near session highs, especially for what was accomplished during the day. Now, we had highs that were made last night after the crop conditions were released, and we got a little bit of a bump. So, including the night session, it wasn't the best settlement. But if you're really just paying attention to what we did during the day, I mean, we really closed at the very upper end of what we saw during the day session today. So that's supportive. You look at November soybeans, maybe not as much of a recovery off the lows, but we're sitting at what looks like a pretty important technical level on November soybeans. When we had that initial contract high of 1461 that was made, the very next day we came all the way back down and hit 1365. And so we just came from new contract highs just above that 1461 at 1480. And here we made a low today at 1365. We're also interacting with the uptrend from the March quarterly stock report lows to the lows that were made in late May. So, if we come out tonight and the weather models, look to have a drier bias, then I would suspect that it's going to look in hindsight like we came down. We tested support on both corn and soybeans and rallied off of that. And on the flip side of that, if this wet, cooler, wetter bias stays in here, we might be right back down to retesting today's lows. And if it takes those lows out, we're going to go searching for the next support level. So this is where charts really, they're not going to tell you where the market's going, but they're probably going to tell you, if we can get through here, then this is the next target. And if we take out support here, then this is the next support. And that's the exercise that we're in right now.
Brian, if I'm a producer, I've fielded this question, or I've heard from a few guys and gals the last week or so. There's plenty who have done 30-40% of their new crop marketing already. They decided to go ahead and do that. They got some good price levels. And then there's some people who've done maybe 10 to 20%. And then there's some people I've heard who've really done nothing. For the folks who've really done nothing at this point, what would you say to them looking at the bearishness in this market? And if this weather forecast, if these rains do hold true, we continue to see bearishness. I mean, what's a good game plan at this point in time here this week if they've been hesitant to pull the trigger?
If you're a producer that has sold nothing, I guess my first question would be why. You're not going to not have a crop at all. And the market has a lot of tools for you to make a sale and then back that sale up. We're not at price levels where spending 20 to 25 cents on a call is going to put you from being potentially profitable to potentially in the red. So this is not, 360, 380 corn. When we're sitting at $6 plus corn, why wouldn't you sell $6 corn and maybe turn it into $5.80 corn by spending some money on a call? The whole purpose of that call is to help you stay in the market if we do have a long-term weather event that takes us to extremely higher prices. But at the same time, you're going to have some kind of a crop to grow. You're not going to be zeroed out on all of your acres. So you have to assume that you're going to have something to market. And if you're just really that concerned about your crop potential and you don't want to sell any of it, then I think you really have to just look at the idea of using puts. And right now, when you look at the December corn contract, we've talked about two major levels right now. I think if you're a put buyer, the very first level that you want to try to protect is the June low, which is 551. That's the low that we had made coming out of Memorial Day weekend. And otherwise, what I would consider critical support on this uptrend is the $5.25 lows. So if I'm a marketer that doesn't want to sell anything, then you better be buying some puts. And you better be buying the puts at the levels that make sense based on the chart. Because if we take those levels out, as much as you might want to look at your own farm and say, well, it's dry, the market doesn't care about your farm. It doesn't care if your farm makes money or not. It's looking at the totality of the market. And if we get rain here and we get extra acres at the end of the month, Jesse, let's face it, if the USDA throws 4 or 5 million acres on top of this thing, and I know we had IHS Market, they just reduced their expectation of corn acres, but they were up, almost at 97 million. You get a number like that, that adds almost 1 billion bushels to the carryout just from acreage. So I'm not going to put it past the USDA to do something like that. We're not in the camp that they should. That's not what we think that they should do. But we've seen a lot of things that it didn't look like the market or the USDA should do, and they did, and it affects the market anyway. So I think you have to just be mindful of these major levels and protect them. So if you don't want to sell bushels, then you need to buy some puts.
Well, Brian, looking at the wheat market as well, I know our wheat growers in the Dakotas, the Canadian prairies, up in the northern plains there, Montana, and on the Pacific Northwest, they've been obviously under a lot of heat stress, a lot of drought concerns up there, a lot of worries with that spring wheat crop. It possibly could catch some cluster storms. That's kind of the talk right now, maybe some of these rains. But looking at the wheat market, I know we saw Chicago KC wheat down hard today as well. What are your thoughts on this wheat market? Any advice for our wheat growers on what they should be looking at doing right now?
Well, for wheat, I've spoken with several producers in North Dakota, and even with the rain that's come through recently, it seems that there's still quite a bit of concern about the crop. A lot of the crop has already headed, and that's not exactly what we want to see at this stage. So I think that is another market where this market, if the crop is there, it's going to price it in before you are comfortable selling it. So again, you're going to be behind the curve when it's actually comes time and say, oh, I do have a crop. Well, the market's going to realize that we have a crop and we're going to be at substantially lower prices. So I think for the spring wheat producers, that put conversation probably especially is pointed towards that region and that particular product. It's going to be very difficult to want to commit to anything physically. But at the same time, we do know that if the crop turns out to be better than expected, the market's going to be substantially lower than it is now. And you're going to be selling bushels at lower values. So I think you have to, again, be looking at some kind of put strategies, buy a put, sell a put. Both of those are non-marginable. I think on the hard red wheat, we're at a different stage of the growing cycle. We should have a much better idea of what type of production is there. And so I think it's probably a little bit more along the lines of something different where you're selling your physical, maybe being a little bit more aggressively hedged as we go into harvest. And maybe you're looking at having some kind of a call position, as we go through summer, because let's face it, if it does go hot and dry, and corn and soybeans are rallying, retesting highs or making new highs, the wheat market's going to want to go up with it. So I think right now on the hard red, you want to be making sales and letting go of your physical bushels, especially if you're a producer like many that don't store your wheat. If it's going to be sold right off the combine, then go ahead and make the sale and take a portion of that sale and find some kind of a call position in case we do go into that hot and dry or inflationary mode, or a combination of the two.
Brian, let's talk cattle. And finally, even if it was a little bit, we saw some upward movement in cash cattle trade here today. Some 122, some 124 sales. We're seeing in feedlot country some dress sales around 195. So, I mean, it's something. I know this cattle market's been struggling here for the last few weeks, but I would have to think nice to see cash move a little bit higher, and obviously futures have been higher the last 2 days with the drop in grain prices. So I would think this has to be positive for the cattle market to see this finally happen.
I think you've got a few things that are working to the benefit of cattle. You had mentioned the cash market firming up a little bit. I think as we get into the end of the quarter, you've got fund managers that have some huge profits in their lean hog positions. So they may want to move from one four-legged commodity to another four-legged commodity. We've seen the technicals really shape up here recently. So we've got, August took out its downtrend. We had some sharp gains here. We're not very far from contract highs. You look at October, that took out the downtrend yesterday. I had a good push today. A lot of these rallies were led by the back end, where your February 22, April 22 contracts were making contract highs, new contract highs weeks ago. And so the way it appears to me is that after that hack of JBS, that might have been a little bit of a last gasp bear trap under what we kind of really thought was a really frustrating market for live cattle, because we had box beef values racing to higher levels, and it just was not dragging the futures higher. So with that JBS hack, we went just low enough on a lot of these contracts to run what I would say are a lot of the long-term stops under the market. We took out monthly lows that morning, came back and closed off those lows, and here we are, potentially breaking out to the upside. So if we can get this August contract to start making some new contract highs, I think that's going to bring in some more fun money. And we're going to have, these guys that have been chasing momentum in other markets, they're going to chase the momentum in live cattle futures.
I think that's definitely the case as well. And it's one of those things, too, watching that third and fourth quarter, I think we're going to see some good strength in this cattle market moving forward. You mentioned hogs. It seems like this hog market wanted to schools of thought out there, is for what I'm hearing. Either we found a top in hogs or we're correcting to run higher yet again. Where do you stand on that? What are your thoughts on what's going on in the hog market here this week?
Well, so we had the June contract go off, a little bit of a correction. We had the July contract, not really doing anything exciting, but one feature that is still very prominent in today's trade was bull spreading. So maybe the July contract wasn't, higher and sharply higher, but we saw a lot of buying of July and selling of these deferred contracts. December was down quite a bit today. So bull spreads are still active. I'm getting a little concerned about the lean hogs as we get to the end of the quarter. Just again, because of the similarities between this rally and what we saw in 2014, based on where the rally started, where the rally ended in 2014 was just above 130. But the timing of that, I think, is also important. We had the June contract expire. The July contract took over. It rallied right into the beginning of July, and then after 4th of July weekend, that market topped, and we saw a rather precipitous drop in lean hog futures. So I'm concerned about it from a point of where the market sits on a priced aspect, as well as a timing aspect as we get to the end of the quarter. So whether we've already made a top, I don't know the answer to that question. But if we haven't, I think we're getting very close to making one. And I would urge the lean hog producers to have some kind of coverage as we get towards the end of the quarter. And I don't think it's a bad idea to go out even in some of these deferred contracts. I had a hog producer tell me once upon a time, if I can just avoid losing money on my December lots, then I'm doing pretty good. And so generally 60 to 65 was a level that he would just lock in. And so now we're well above that still, even with some of the recent downturn. So I think you have to look at it from a profitability standpoint and manage that as accordingly as we get to the end of the quarter.
Well, Brian, a lot of things going on in this market trade here in agriculture. And looking back, any final thoughts or anything else you want to reiterate for us here on today's show before we run out of time?
It's just keep your head about you. This market is going to continue to frustrate people. I think we're going to continue to see these Sunday night movements where we're going to open 10 higher or 10 lower. And in the first half hour of trade, you're going to see 20-cent gains and losses on Sunday nights just based on weather models. But I think, again, for grain producers right now, you really have to think about your big picture profitability and just have some protection below the market, because honestly, if in the next couple of weeks the weather does improve, if the USDA puts more acreage in here, that can ruin this rally. And as friendly as I'd like to be, and as much as I'd like to see this market go right back up, and I think it can. We also know the market can go right back down. And so, if we end up raising a decent crop, and let's face it, we've got a lot of dry Junes in history. There's 13 of them that stand out since 1960. 7 of those had above trend yields. 6 of them had below trend yields. So it really all comes down to July weather. And I know we're really excited about how dry it is in June, but if July weather shapes up to be better than June, and we get more acres in the ground than what we think right now, the carryout could look a lot different a couple months from now.
Well, Brian, I know you and the team there at agmarket.net can help producers with their marketing. You guys got a lot of knowledge, a lot of great advice, and it's just as simple as checking out the website, checking out the app, or giving you guys a phone call, isn't it?
It is. You can reach any of us at agmarket.net at 844-4AGMARKET. So that's 844-424-6758. You reach me directly at 815-665-0463. Website's www.agmarket.net and www.agmarket.app.
Brian, appreciate the insight and the time as always. Thanks for joining us today. Have a great rest of your week, and we'll talk to you soon.
Thank you, Jesse. Appreciate it.
Brian Splitt with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Tuesday, June 15th episode brought to you by Growmark FS. I'm Jesse Allen reporting.